Hi, and you're watching The Week Ahead with London Capital Group, discussing what will be moving the markets in the week beginning August the 24th. Now joining me now is Brenda Kelly. Brenda, in terms of scheduled economic events next week, what is taking your fancy?
Well, it's coming back to normal really next week. We have a plethora of different macro data, and given that we are very much watching what the Fed is going to do next, I think all eyes will very much be on the US macro data. Okay. There's very little of note on Monday other than one of the members of the FOMC, Lockhart, will be speaking. So we might get a little bit more colour on what to expect, particularly in light of what's happened with China and of course the disinflationary aspects that come with lower oil prices and the devaluation of the yuan as well. So that will be watched and cause a little bit of volatility, mainly because there's very little out on the day on Monday. But apart from that, you'll also have PMI services for the US, you'll also have new home sales, consumer confidence, and more, I suppose, you'll have some prelim GDP for US as well. So that is expected to come in around 3.2% annualized, but we could obviously mark that down a little bit in light of what we've seen in terms of manufacturing data today. So the dollar does seem to be weakening ever so slightly, mainly owing to the fact that the probability of a rate hike next month has fallen to around 25%.
Okay, it's fallen to that low. Touching on US housing data, because that's coming out on Tuesday, I mean, home prices are expected to have climbed at a faster pace, and we are expected to see, well, analysts are expecting a rebound as well in purchases of new homes for July. What are your thoughts on the state of the US housing market right now? We're still seeing some pockets, some soft pockets, are we not?
Well, the US housing market is actually still fairly strong, and as is auto sales, but it isn't the whole thing that's going to keep it together. Ultimately, I think they will need to see retail sales start to make its mark, also services and manufacturing. Bear in mind, it's a consumer-led economy, so obviously housing does matter, but given that around 60% of people within the US do not actually own their house, and that has decreased substantially since for the last 10 years, then we could expect to see a little bit of weakness, particularly as we go towards monetary tightening.
Okay, fair enough. Bearing in mind what we've got on the schedule next week, are there any particular currency pairs that you'll be keeping that little extra watchful eye on?
Well, I always like to look at cable, obviously, and I think really we have been somewhat vindicated above the 156 level. The pound does look that bit stronger, certainly in terms of the inflation and wage growth. It does seem in a better position, the UK that is, to maybe look to tighten rates. But inflation and lack thereof is going to continue to be a problem. And speaking of lack of inflation, I think the Japanese market is the one I'll be watching, particularly the yen. We are looking to see their CPI data coming out next Friday. You're also looking at household spending and the unemployment rate, as well as retail sales. And dollar yen has been an interesting one to watch. Certainly the dollar should be stronger against the yen, but given the bloodbath we're seeing in equities, the yen has become something of a safe haven, which has provided a pullback. Now that may or may not present an opportunity for those who want to get long the dollar against the yen. It would all depend on what sentiment is like in risk assets, but for the time being, the technicals would indicate that above the 123.60 level there is good potential upside with the dollar likely to strengthen. But again, we'll have to wait and see what the Fed wants to do there.
Okay, in terms of sterling, talking about pound dollar and where it's going to be heading, we've got a second estimate of UK GDP coming out Friday morning. No changes are expected. Is this a bit of a non-event?
Well, I wouldn't say a non-event per se, but obviously it is going to be closely watched. I'm not so certain it's going to be the linchpin of any decision from the Monetary Policy Committee, but what it will do is provide an even greater support to the floor that's already there in the cable at the moment. So if it does actually manage to beat expectations, then we could ultimately see the pound actually push through that 157 marker, which has really stood in the way between it and a very important fib level, the 157.70 level, that we have failed to really break above over the last number of weeks. So this could be the catalyst that pushes us that bit higher. And bearing in mind as well, with euro dollar becoming something of a safe haven, the euro that is, and the bund being very well bid, owing to the fact that nobody wants to be in equities at the moment, it will, due to its correlation with cable, likely drag the pound up along with it as well. And at the moment, 113 on the euro dollar is the big resistance level. But if we push through that, then we could very well see ourselves explode higher, because that's been such a heavy resistance level, a lot of stops would reside above there.
I was just about to say, what do you see driving euro over the next week? Obviously, we've got Greece and the fact of the Greek government. We were actually talking last week, weren't we, about chances of a snap election, and it looks obviously extremely likely now. So what's going to be driving euro next week, and what's next for Greece, should we say, as well?
Well,
who knows?
Who knows? I mean, I expect Greece will take its own sort of problems with it, but I'm not so sure it's all that endemic to the euro dollar at the moment. Certainly there's a huge divergence in the yields that you'll get on Greek government bonds versus that which you'll get in the core and the other periphery countries. But I suppose really looking at the German business climate there, I think Germany remains the powerhouse. It does look a little bit softer over the last number of months, certainly vis-a-vis the likes of Spain and even Ireland. But if we see a little bit of a move backwards to, to strength from the German point of view, then we could very well see the euro push that bit higher. But I don't necessarily think that Greece is going to be much of a catalyst. It will provide volatility, and of course, if we see a similar sort of entity getting into government this time round, this will be the 6th election, or the 5th election in 6 years, or 6th in 7 years, one or the other, then of course that could cause a little bit of upset. But I'm not necessarily sure it's going to have the same effects it might have done when it threatened to leave back in July.
Okay, Brenda, thank you ever so much. That's the week ahead with Brenda Kelly. Join us next week. Goodbye for now.